Welcome to the Trading Room. This is Rob. I'm joined by Darren, and we are going to talk about another boring week. I know, I'm sorry. I know you wanted some excitement, but that is just not what the market is giving us. And you all know the Maverick saying, trade the market in front of you. Not the market you want it to be, not the market you think it should be, but just trade the market in front of you. We've been very clear over the last couple weeks that this market is probably not going anywhere. And we've told all of our traders, okay, let's do more theta positive trades. Don't ask your directional trades to move very far, and be more reasonable on all your trades and trade less if you need to. So the same thing happened. We're just simply in the range. We'll look at a chart in a second. We're in the range. And not just in the stock market are we in the range, but all asset classes are sideways. I mean, bonds have gone nowhere. Gold has gone nowhere since breaking out and making a run. Currency markets have pretty much gone nowhere. So the whole market, not just the stock market, but the entire market has been very, very sideways. The one point that I want to bring up is that the regional banks, we're going to take a look at the KRE. This is the bank index. And as you can see here, it is not looking so good. It did have a little bounce at the close on Friday. And I was thinking if we were going to close on our lows or break on Friday, that could be some trouble for the market. And the one thing we did notice, and Darren and I talked earlier about this, we do think that the market bullishness, remember, we were at like a +1. We think it's kind of waned a little bit. It just has waned a little bit to where we're not nearly as, plus 0.5 as we were. We're now more probably close to a 0. Let's talk about this CPI last week. So this was a kind of an interesting report. The CPI comes out on Wednesday. And the initial reaction is, yes, is very bullish. And they really grabbed onto that year-over-year CPI number. It was supposed to be 5%, 4.9. Ooh, I know, very exciting. And for about 45 to 50 minutes, the market rallied pretty strongly. And then I think people really started to look into this. They saw the core CPI and said, look, this is basically as expected, not better than expected. And then the market started to sell off a little bit on Wednesday after that. We did get a better reading from the core PPI and the PPI on Thursday. That was better than expected. But overall, we're getting inflation that is lessening, but not all that quickly. That's where the market is. We have inflation is moderating, but not very quickly. We have growth that is moderating, but not that quickly either. We're pretty much stuck in the middle, which is why we don't think we're going to go anywhere. Darren, do you have anything to add to these CPI and PPI reports that came out?
No, I'm actually glad that they came out as they did, because I've been harping on whenever the actual number is wildly different from the forecast, it really hamstrings the Fed. Is they're left in this position of, our best economists are telling us one thing, the actual numbers come out differently. How do we create policy around that? So I think this CPI and the PPI report really give the Fed a little bit of breathing room that they can have some confidence in. Okay, we know how hot the economy is right now. We're getting a better take on it, and we can move forward with whatever course of action they want. They could start putting some language in their discussions that say that could be more forceful, as we have a handle on this, we know where it's going, trust us. And I think that in the long term, I think that's going to help the markets. But right now, I mean, you could have fallen asleep 2 Mondays ago and woken up today, and you wouldn't have missed anything. Honestly, it didn't look. I mean, we've just been marching sideways for the entire month of May. You've got the Dow was down 1.03. S&P was down a quarter. For all the movement we had, the S&P was just down 0.25%. The Nasdaq, big cap tech is the only thing that is pushing the Qs up. They were up 2/3% right there. But go ahead and when you get a chance individually at home, pull up a chart of the Russell. Small cap stuff is looking really, really weak. And it's down at the You got the S&P, the mid and big cap stuff is going sideways, but the Russell is just looking, really, really poor. And it's one of those things, it's like the little fish in the pond are the first to get eaten when the food runs out. And I think that's where we're going. I think there's a lot of weakness in small cap. I think there's a lot of weakness in big business in business in general.
I think you're exactly right that the large cap tech did mask some underlying weakness this week. Google had a great week. Other large cap stocks had a pretty good week. And it kind of masked how weak this week truly was. But I don't want to say it's weak because let's look at the charts. All we have to do is look at the charts. And you can see, I would really want to focus on these last 5 candles. These last 5 candles, look at them. They've gone virtually nowhere. And yes, we had movement, but every single gap up was sold off. Every single sell off was bought. Look at those long lower shadows on Wednesday, Thursday, Friday. So there's buyers out there, but as soon as there's a pop, there's sellers out there. More confirmation that we are very highly likely just going to move sideways for the foreseeable future. Yes, the cues have broken out. And I think if anyone wants to be bullish something, that's where you've got to be bullish. But remember, this is the NASDAQ 100. And if you take a look at this as far as weighting goes, the FANG stocks, Facebook, Apple, Netflix, Google, the Teslas, they account for like almost 40% of this index. Those stocks have been strong. Everything else underneath has actually been fairly neutral. So I think that's where you just have to look at this market is that yes, there's a few things, large cap tech is going up, but everything else is going sideways. We come over here to the VIX, it's not telling us anything. It's at 18. It's not at the low, it's not at the high, it's in the middle. As I said earlier, every single market is just in the middle. So let's talk about this week. We don't think it's going to change. This is a monthly options expiration week, and we typically do get some higher volatility, especially on Wednesdays lately. It seems like Wednesdays have kind of been the freak out days for the options expiration week. I think we could go down and touch the bottom end of our range, or at least down into the bottom third of our current range. I do think we're going to get a little bit of selling here over the first couple of days of this week. But I think all the sell-offs will be bought just like they were this week. We do hear from Chairman Powell on Friday, so that will be roughly about 10 days after the Fed meeting. There has been enough new information in the last 10 days where I think he could give an update. This could be a market-moving speech. I think you want to at least be aware of that on Friday. As far as economic reports go, not a whole lot here. We do have retail sales, but the market hasn't really cared about retail sales. The consumer has stuck in there okay, not great, not terrible, just okay. And we do have 2 regional manufacturing numbers. These have been extremely weak, and you can see they're supposed to stay extremely weak. There's no surprise here that regional manufacturing is weak, but when you take a look at numbers like the ISM services number, so we get 2 numbers at the first of the month, ISM manufacturing, which is making products, and ISM services, which is the service economy. The US is about 2/3 of a service economy to the other part, and the services has been growing quite nicely, where the manufacturing has been shrinking. This is simply showing us the exact same thing. I don't expect there to be any surprises whatsoever off of these numbers. And so when we take a look at where we are, where the market is, we are at the weakest +1 that you could possibly get. We are still trading above the 50. We're simply at the 20. And we don't think we're really going to go anywhere this week. My call is we're down for the first couple days, and then we recover by the end of the week to basically go nowhere. Darren, do you want to add anything to that?
Yeah, I mean, I think we're going to be in the same position. There's nothing on the horizon except I think you're right. The only thing on the horizon that could possibly move the markets is when he speaks on next Friday. I think we're gonna see a lot of chop. As you said, any gap ups are going to gets sold off, but then midday the buyers are going to come in and put those long lower shadows in there. I think we see that really for the next week. I can definitely see headed down to the 50 period moving average, but I don't think we touch it. I think we get about halfway there, and then the buyers start to come. I'm thinking about right at that level right there. Go down. I mean, that's only a percent or two away, and I think could be one of those things where we touch that area, and then midday on Wednesday it gets bought, and you just end up with a lower shadow touching that area, and you actually have a solid candle above it, putting us back up into this range. It's the adage, sell in May and go away. I mean, usually that means Memorial Day. So it started a month earlier right here, and I think we're going to be sideways until Labor Day, until we get some sort of market moving event. I think we're in for a very choppy, sideways, essentially boring but dangerous market, because people are going to want to force trades. I really don't want to take anything more directional at a +1 or a -1 until after Labor Day here. And I think I'm just going to spend the next 4 months selling theta and reevaluating every week. We're going to see this on the individual sectors right here. Pull it up there, looking at this histogram right here. I was really surprised, pulled up utilities. It looks like there's just no number for utilities, but no, there was movement. But overall for the week, utilities actually went nowhere. Communication services, that's the only one that had positive move this week. And I mean, consumer up, 0.5%. Technology barely moved. But you look, and you've got 6 sectors that have really took a 1% or greater hit, but we were flat. So this is one of those things that Rob was talking about. The only thing that's holding this sector up, the only thing that's holding the markets up, appears to be big cap tech, and everything else is really starting to weaken here. We were much more concentrated at 0 a couple of weeks ago, and now we're starting to see some differentiation. There's only a couple things that are positive, and you've got 4 sectors that are actually negative, and we're going to see. So taking a look at individual sectors right here, you can see utilities absolutely just went nowhere. I mean, and also take a look at that doji on Friday. I mean, right in the middle of the range. You can't get more neutral than that. So we were to 0 last week. We're still to 0 this week. Communication services, it had a classic bull pullback, and it did some decent work right now. I'm at a +1. Reason not a +2, because we're sitting right there at resistance. If you want to break through that, then you make me the case to say +2. But until we do that, this could just be the start of another sideways trend, and we could just bounce around between 50, 58, and 60 in a very, very narrow range, and we'll wait to see what happens. But right now, I'm at a +1 on communication services. Real estate, again, I mean, some of these charts are just boring. You realize that for the past 6 weeks, we really have not gone anywhere in some of these things. So, I mean, this is just a 0, and again, you're right in the center of that range, and your moving averages are just stacked on top of each other. There's very, very narrow space between them. This is something people are just sitting on their hands in a lot of these sectors. There's not a lot of buyers, not a lot of sellers. People are just kind of wait and see right now. Looking at industrials weakened a little bit. I'm at a -1 on industrials. It's pretty mild -1, but I mean, you can see we're in this month and a half descending triangle right now. We're nearing the bottom of it. I think between industrials and financials, if something was to break lower, those are the ones that are going to lead us to the downside here, because they're looking pretty weak. Looking at healthcare right now, it was a 0 last week. It's a 0 this week. We're just between the moving averages right there. We're kind of at the bottom of this channel, almost a descending triangle right there, but from a high base. So this is going to be one of those things. It wouldn't take a whole lot to bounce above that 20-period moving average right there, and then you're up above the downward trend. But until healthcare wants to show me that, we're just going to need some compression down to that 132 level right there. And if it breaks, I mean, I still would be bullish on this down to the 50-period moving average right here, but that's not too far away. And we get below that 50-period moving average, I think we really have to evaluate what was a previously strong sector. Once you have what was strong, what was holding up there, begin to break down, you really have to be prepared for the market to completely change direction here. But until that happens, we're just going to be at 0 on healthcare. Financials, that was at a -1 last week. We're at a -1 this week. This is getting closer to the bottom of it. This is weaker than what a lot of other things look like. This is as I said, this one and industrials. If we break, I think they're going to lead us down. Wouldn't take a whole lot to break below that support. Right there at about the 31.75 area. I mean, we touched it on Friday, and to break down below there, I think you're looking the next support level probably at that 30.50 level, 31 level right there. And I think that's where you could go. If we break below that, then I think it's look out below for financials. But there's some competing stuff, and we're going to see it. If you pull up KRE, like Rob said, that's the regional banking index. Looks really awful, but then you have to ask yourself, if these regional banks are going to go, who's going to get the deposits? It's going to be the large cap banks. The ones that are too big to fail are becoming too bigger to fail even more. So there's some push and pull in there in the finance sector. Looking at consumer, actually doing decent, looked a lot better. I mean, we had that range. Okay, we had a longer term ascending triangle, and then from April we just had that range. We poked our head above it Wednesday, Thursday, and Friday, but we couldn't hold it on Friday. So I think this is one of those ones where if you show me next week that you can have a breakout in consumer, I would fully buy it. I think it would be good. We're at the top part of the range. It looks like we want to break out. So I'm mildly bullish on consumer right here. Tech, another one, mildly bullish at a +1. We broke out of the range on Wednesday, really couldn't hold it. But you have those long lower shadows Wednesday, Thursday, Friday. So there are people are going to buy it right there. The gap ups were generally sold off, but then the buyers came in midday and drove it back up. So again, how much of this is big cap tech, and how much is the rest of the tech sector? I think you almost have to go to industry groups and try to pick and choose what you want to do in the tech sector. Materials and energy really weakened. I'm in a -2 on materials. I mean, we broke below that little channel right there. We're below the 20. We're below the 50. I think the next place, I mean, we could get down to 75 quite easily here in the next month. I think it would be a decent target for that one. It's just everything is just weakened in this, and it was looking pretty good a month ago. It was above the 50 period. It was above the 20, and it's just fallen off. And you can see the past 3 weeks, it's been very volatile, very choppy, and a lot of red in there. But then you have some really, you only have 3 green candles in that entire period right there. So people are bailing out of materials. It's not a rout yet, but I think people are. It looked like materials were going to be a leading sector, a month ago, but everything is just falling apart on that right there. Take a look at energy now, and this is even more of a -2 than I would say materials is. We just had a classic bear rally right there, and we're back down. We are at support, but I think we could go down right to that 76 area if Chevron sneezes wrong. Then yeah, I think you could have a lot of these energy companies are going to start to make new lows. And again, this is the one you go back a month, energy looked like it was trying to lead us out, and it fell apart just as fast as materials did, but it did so even faster. So taking a look at all this, we've had movement. I mean, a couple of weeks ago, last week, we were stacked at, almost everything was at 0, only a couple of things at +1. We're starting to see some differentiation right now that I don't think is reflected in a chart of the S&P. I don't think it's reflected in the chart of the Qs. You got energy materials at a -2, industrials financials at a -1, utilities, healthcare, and real estate all at 0, And the only things that are looking good, consumer, communication services, and technology. Now, in the market, when the broad sectors get squirrely like this, I've tried a couple of different things. And I'm looking at this. We've got 10 sectors that we take a look at. We're on a -3 to a +3 scale. So let's just expand that out and call it a -30 to a +30 scale. And that, I think, is going to tell us, give us a little bit better idea of where we are. So we've got materials and energy at a -2, so that makes it right there at -4. Industrial financials at a -1 each, we're at a -6. No movement from anything at 0. But then we've got 3 sectors at +1. So -6 +3, we're at a -3. I think this is matching our monthly outlook pretty good there, Rob. Even looking at the individual sectors. I mean, to be at a -3 on a -30 to +30 scale, that's just only slightly bearish. 10%, 10% bearish to the downside, which is pretty. Yeah, I don't think we can get any closer to a true zero using this method than we could just look at the broad markets. But this gives you a much better look at how the internals are going. All right, let's take a look at some possible trades. All right, in real estate, last week we were long Invitation Homes, and it's still looking pretty good right there. Didn't have a whole lot of movement, just slightly to the downside. We've got some more time on this trade, I believe, and it's still looking good. This is one, if you haven't gotten into it, I would still be more than happy to get into this. It's held up very nicely, and I would, this is a good re-entry one right there. I mean, very little movement. We're down 2 cents for the day on Friday, so this is, I like this one. I would get back into this again. Right now, we're looking at VNO, Vornado Realty. This is in a low base, and this is a little bit of a counter trend trade. With real estate being at a 0, this is on the low end of it, and real estate had that up movement. That minor up movement. This one just couldn't do it. You're really at long term, and that was set back in March. That bottom was set back in March. And you take a look at the movement, really not a whole lot. So go out to June and buy those 15 puts, and then you've got 1 week on those May ones to short against it. Right at the all we want to do is just go down to 12. Can you make a 79-cent move in 5 days? I think this one probably could, and then reevaluate. This is one that I would go out to June, sell May's, take a look at it again, and probably turn this one into a bear put spread. Just to keep the puts and then sell probably the 11s against it, or maybe even the 10s. If you give yourself a month. So this one, like this one, to the downside. Okay, so we were long Vodafone, and I really don't think this triggered. It depends on what you did, but you've got 5 red candles. I mean, this thing fell apart, -6.6%. So I know this didn't make it into my portfolio. If it did, you're sitting at a small loss right here. This is why we size things for max loss. But I would not say that this triggered in our portfolio. Rob, did you put this in yours? Because I know I didn't put it in mine.
Yeah, I've got it in mine, and it's a loser.
You got it in yours? Okay. Hey, they happen every now and then. This week we're looking at T-Mobile. And it's sitting there right about 144 right now. So I would go out 2 weeks to May 26th and take a look at that 140, 145, 150 butterfly right there. I mean, you can see, this isn't moving a whole lot. We're expecting it to go up $1, and it's right in the middle of the range. I mean, for as large of a stock as this is, it really doesn't move a whole lot. Between 140 and 150 in a range for the past 3 months. That's not a whole lot of movement. So this is one that I would be more than happy to do. If it goes slightly up, we're going to make the most. If it stays where it is, it's still going to be in the profit area. So this is one of the ones where you're already in the profit area when you're getting to this. This is one size for max loss. Hold it for 2 weeks, and then see which side you need to clear out after that. And healthcare. Last week we were long DXCM. And it performed a little bit for us. It was up 0.75%. But classic pullback to the 50. And you look at we had some movement. It was looking pretty good on Wednesday. Gave a little bit of it back on Thursday, but it still looks decent. It's still in an uptrend. So I'm happy to keep this one here. We're looking at Eli Lilly right now. Nice high base. not a lot of volatility in this. It's just been in this grind higher right now. So I'd say go out to June 9th. Give yourself a month on this one. I'm going to do the 430 and then sell this next week's 435 against it. It's just in this grind up right here. I mean, you could even go out to the 440s if you wanted to. I think there's going to be still some value in those. 435 or 440, I think would be a good trade either way.
And I agree with you, Darren. In industrials and financials, if we do break lower, I think these are the sectors that are going to leave us down. So last week we had a short in Caterpillar and it performed very, very nicely. I don't see any reason why this thing doesn't fall off the table. So whenever you get these low bases, I always think of a bouncy ball. It's just bouncing off a table, lower, 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 and eventually rolls off the end of the table. So Caterpillar looks great, was down 2.5% this week. Looks like it's got some more. All right, since we already got a nice short in Caterpillar, we're going to take a look at a sideways to bearish trade. So again, we don't want to be too directional. So the Caterpillar trade was pretty directional. We want to do something bearish, but less bearish. So this is Union Pacific, and you can see it's been going nowhere, pretty much sideways. But we think it's going to go down to the bottom end of the range. So we're right here, 203 down to like 190. So we think this thing starts to just trickle down. So the big question is, where is the target and where's your time frame on a butterfly? So I think there's two possibilities. If you want to go short term, 1 week, I think you go with the 195 butterfly. So you're basically saying this stock is going to go down 1.5% next week. So it's going to drift down to that 195. If you think it's going to go lower, then I think you go out another week and you go down to the 190 at the bottom of that range, to where you can then open up the 180, 190, 200 butterfly. That's going to be a nice trade because right now this butterfly is very cheap. If it goes down and drifts down to that 190, that's going to be a really nice profit. These targeted butterflies can be very profitable if you get the time frame and the target correct. Financials is the other industry group I think is going to move lower. Last week we had a sideways trade on KKR, and it just drifted and drifted and drifted. This was a max loss for me. I needed this to stay in this area, and it did not cooperate. So this trade is over for me on a butterfly. This week, a lot of times when you have a good call on a sector or an industry group, sometimes it makes sense just to play that industry group and not get into individual stocks. Right now, the regional banks are in trouble, and a lot of these regional banks could potentially go out of business. However, if they don't go out of business, they can experience a 10, 20, 30% jump because they're down 70, 80% for the year. So what we do is we say, okay, we're not going to take single stock risks. We're going to take a look at these sector ETFs or industry group ETFs. And this is what we're looking at here. I want to be short the regional banks as a whole, and I want to do it in a safe, effective way because, as I said, let's say the government announces some program to rescue these banks. These banks are all up 10, 20, 30% in a day. So we want to make sure that we're understanding of the risk. And by playing these regional ETFs, it's really, really nice. So the big question is, what's your time frame? What's your target? Now, I'm looking to do something a little bit shorter term. I'm looking at these May 19th, and I'm going to the 35. Boy, look at that on a chart. That is about the wimpiest trade you can even look at. 35, 36. So look, if it doesn't go down and it goes up next week, I'm out. I've got a loss. If we get a sell-off next week and go down, that's going to be a really nice gain. You're going to bring in about 80 cents on this $1 spread. So you're going to have about an 80% profit potential and a 20-cent loss potential. I really like the risk reward on this one. If it hits, it's going to be a really nice payoff.
So in consumer, last week we were short Rubbermaid. Actually, it's Newell Holdings, I think is what they're calling it right now. And this one did really well for us. I mean, we got into this trade, and this thing was down 8.33% for the week. So, this wouldn't even hit my screen right now. It's below $10. So we did really well on this one. And if you got something that's got room to move, and a little more time on it, I think you get paid off even more. I mean, there's just no appetite for this. We're looking right now is VIPS. It's the VIP shop. And we're just going to say, it's kind of in a high base. We had a really good candle on Thursday, probably news. But, even though we gave back some ground on Friday, we stayed in the upper half of that candle. And that's still, when it does that, that's a very good trade. It says there's still strength in there. So right now, this is above, we're going to call this a high base on probably a yearly chart. So that 1550 was resistance for, the last 4 months, it looks like. And it went up to 16 right there. So right now, what it's looking like, we want to wait and see if this bounces on Monday, but it looks like that 1550 is going to become support. And if it does, then I think, this goes out pretty good. So what are we going to do? We're going to go out to July. Okay, that seems like, hey, Darren, it's May. Why are we going out to July? Because this is something that if it's going to move, look at the time frame on that base. We could have a 3-month bull market in VIPS if we break out. So that's the one. Your directional movement oftentimes takes just as long as when you base like this. So yeah, go out there, buy those 14s, sell next Friday's 16 against it. So then you could keep it for another 2 months and just keep putting diagonals on these things. But yeah, this is one that I really like. So technology, last week we're long Microsoft. Didn't really get any movement out of it. It still looks like a good trade, and this is one of those ones where it didn't really go up, didn't really go down. And I think we sold the 310s against it, so those are expired. I'd look to sell something else. In fact, I'd probably sell next Friday's 310s against it again, and just let it keep going sideways here. So this was a pretty good trade right here. I'm happy to keep staying in it. What we're looking for right now is Atlassian. The ticker for that is TEAM. And this thing broke down hard. Broke down, looks like last Friday. And it just, classic up bear rally right there, confirmed that rally was over today. Even though you had a long lower shadow, we had a lower low and a lower high. This is one of those ones, 130, 135 bear call spread. Completely happy to do it right now. That we're sitting right at 130. Now, when you get something like this, when you're buying at the money and you're selling, essentially deep in the money with only a little bit of time left, you could probably get a $4 credit out of this one. So, maybe $3.50 to $4 credit. I completely see you've got $1 to $1.50 of risk if it goes up or stays where it is, and then you keep that credit. So the reward risk on this one is looking really good.
In the materials sector last week, we were short AVTR, and you can see we had a nice bear rally. It was looking to turn over, and it just didn't. Look, this is why we have more time in it. We've got one more week on this, and it just needs to work its way back down to the 19 area. We'll see what happens. At this point, the stock went up about 1% for the week. We'll see what can happen to it next week. This week, we've got a sideways to bearish play. So again, we want to stay with these sectors. The sectors that are weakening, we want to stay, again, sideways to short in these sectors. And this here is BHP Billiton. We've got an overall descending triangle lower. We could still be in this descending triangle for a long time. So this is where we like to just say, hey, why don't we just throw on a trade that's profitable somewhere in here and just let it do its thing. So this is a June butterfly. This is pretty far out for butterflies. And so you can see that we're saying we think it's going to just drift lower. So 55 is that midpoint. That's even off this chart. But basically, it needs to trade below this level here. And it trades anywhere in here, all the way down to probably 53. It's going to be a really nice trade for us. We've got a lot of time. Whenever you have a butterfly with a lot of time, we always like, if it gets to the midpoint, if it gets to 55 somewhere this week or next week, we like to take half of the trade off because it's so much time. We want to say, hey, let's ring the register, take some profits, reinvest that into another trade, and move on from that. In the energy sector, another sector that's weakening. Last week, we had a butterfly sideways on RRC. 26 is our midpoint. So you can see this is perfect. This is doing exactly what we wanted it to do. We wanted to stay right around the 26. It weakened a little bit, pop back up. This expires in a week. So as long as it doesn't blow out above 28 or below 24 this week, this is going to be a really nice profit. This week, we are sticking with sideways. All right, so this is Chevron. Overall, pretty big movement. Pretty big movement in Chevron, all the way from 150 up to 172. Here we are down at the bottom of the area. So the question is, where's it going to be in a couple of weeks? So we're going out 3 weeks, and I like this right smack in the middle, the 160. So we're looking at the 150, 160, 170. We think this thing stays in its range and actually bounces up a little bit over the next 3 weeks. Same thing here. If you get to 160 this week, we think you take half off the table, take that profit. It's probably going to be like a 70, 80% return on your money if that happens. Take half of it off and then leave the other half to manage at expiration. So that is it for our trades. If you want to share trades with the rest of the Maverick traders, please log into the website, go to the members area, and you all know where to go. Let's all get the discussions going and help the firm make some profits. To wrap this up, this hasn't changed in 3 or 4 weeks. I have not updated this slide at all because nothing has changed. The market is sideways and bullish. Don't ask your trades to move too much. We have a saying at Maverick. We've been saying this for decades now. Trade the market in front of you. Not the market you want it to be, not the market you personally think it should be. Just trade the market in front of you. It's very clear to me that there is very little opportunity to make money on trending stocks. It's much easier to make money on time decay and theta. Make sure you're switching gears. This may last through the whole summer. We have no idea how long it's going to last. It could end this week. We have no idea. But match your trading up to the underlying market. It is so much easier when you do that. So we've been talking about this for the last couple of weeks. Just downshift your trading, plus ones, minus ones, zeros. That's what we're shooting for. We're going to grind it out. We're going to make some money while the market's grinding here and spitting out other traders. And then when the market moves, we'll go ahead and take some more directional trades, and we'll do great there as well. That is it for the trading room. Thanks for joining us. Goodbye, everybody.
Good trade, everyone.